Good morning, and thanks for having all of us here. I know we are close to the weekend, and it's a lot of things for all of us to wrap up. But very grateful to have this panel here, spending its valuable time on sharing some thoughts and insights on an area which we personally, as a firm, have seen so much of traction, which is two things, right? One is financial services and fintech, where innovation is happening. Innovation in financial services primarily happening on the fintech side today, but regulation and how we see it, right? So regulation, and I have some questions which I thought might be relevant for not just the panel, but all of us sitting in the audience to understand, because regulation can sometimes be seen as a break, but in a lot of the other countries that we work in, regulation is used as a guide to make sure that we channelize energy, okay? So before that, I'll just do a quick run through of the panel. I've got Sonam here. She is a quant expert, more than 12 years of experience in this particular area. This is for, just as a quick aside, so this is an area that I had started my career off in, and then I branched off into less technical areas. I've got Jaideep Pawar, who's the CEO of GRAMePAY, 25 years in BFSI. I doff my hat to you. And he's worked on global payments platforms. We don't have Prasanna Lohar, right? No, we don't have Prasanna Lohar. We've got Rohit Katyal. Rohit is the Chief Business Officer of PhiCommerce, but he's done a lot of commendable stints at Airtel Payments Bank, RazorPay, Droom, etc. Then we've got Sabyasachi, Sabya. He's the business head of Head-Trillionloans, BharatPe, but he is ex-McKinsey, Delivery, and Paytm. And then we have got Sanket. So Sanket and I, we are trying to work together. He is account director at Signzy, but he's got a lot of other experience. Especially I saw a Chinese script on your LinkedIn, so that means you've got Hong Kong experience, right? Yeah, okay, so that's welcome to the panel. I'll just dive into the questions that I've sort of set out here. And of course, this is a curated set of questions, but I'm hoping that some folk from the audience would have others as well. Now, the way we see fintechs is we say, okay, when we go and talk to a financial institution, what we say is, why would you want to build if you can buy or lease? It's a faster way to market. So my first question is around that as well. The first question is, buy or lease rather than build. This is one of the three reasons, including cost and agility, as to why financial institutions are using fintechs globally. Could you probably share your views on how fintechs are integrating into India's customer service fabric using this mentality? And what I'll do is, I'll not go the normal round-robin league. I'll try and curate it to a bunch of folks. So this question goes across to Sabya first, and maybe share your views, and then I'll figure out who else.
Hi, good morning, everyone. I'm Sabyasachi. I'm a director at Head-Trillionloans, which is the NBFC arm or subsidiary of BharatPe Group. Okay. So, see, I think the whole question around buy or lease, I think the broader context is the increasing collaboration today we are seeing between banks, NBFCs, right? Entities who've been around for decades, and fintechs on the other hand, which, so to say, is a somewhat more recent phenomena, which have come into existence and into the light over the last decade or so. Right? Now, how does this collaboration work? The BFSI model is a very established model that has run for several decades, and it has worked well to a large extent. Right? So there is a certain branch network, there is a certain fixed standardized set of products which has seen incremental growth or incremental innovation over a period of time. Banking penetration has gone up, credit penetration has gone up, and so on. Right? Now, where fintechs came into the picture was, I think there were three key reasons where fintechs had a certain USP, right? And there you were seeing, therefore, an increasing penetration there. I think one is around access, right? Now, access, not just in terms of the unbanked sector, right, so-called, but also the sector which was traditionally being or the segments that were traditionally being underserved, right? Now, it could be segments which have easy access to banking services, but one or more of the needs is not being fully served, right? And there, fintechs have done a reasonably good job at figuring out specific niche segments or specific products where a certain degree of customization and innovation has happened, right? So, for example, some have targeted, let's say, merchants, right? The small kirana stores or the merchants. On the back of payment technology that has then moved into lending, it has also into other kind of SaaS-based products, right? Now, this is a segment which had banking access, right? But there are certain kind of needs, including credit needs, which were not fully served under the traditional BFSI space or under the traditional BFSI products, right? So access to specific segments and products is one key thing that has been brought about. I think the second is around technology. Right? Lot of the banking products, for example, banking and lending products has been in existence for quite some time, like I said, and you have seen incremental innovation, right? Now with fintechs coming in, I think there has been, innovation is sort of left forward, right? So whether it is in terms of payments or in terms of credit or in terms of even, banking, so to say neo-banking apps and all, I think we have covered a lot of ground in the last 5 to 7 years. And a lot of that obviously has been made possible because of improvement in underlying digital infrastructure, like our keynote speakers mentioning, right, with the India stack coming into play, with UPI, with a lot of other enablers coming into play. I think fintechs were able to leverage that quickly and build products on that, right? Now, I think these are some of the areas where fintechs have a certain advantage and they've added a certain value. Now, from a BFSI space, I think the collaboration from between fintechs on one hand and banks on NBFCs on the other hand, I think it's a win-win. It's a win-win collaboration, and we see that only increasing over time, right? Now, banks obviously have a very strong, stable core system. They have a great network. They have a high level of governance. Banks and NBFCs, the whole BFSI space, understands risk to a large extent. They know how to take controlled risk. Fintechs, on the other hand, help bring access, help bring a certain new products and innovation. And I think instead of the BFSI space building all of this, right, on its own, the collaboration with fintechs will work well both for them as well as for fintechs. And that's how I see the space moving forward.
Thanks, Sabya. And Sanket, do you concur? As in, do you agree? I mean, you are a large provider of services, right? Integration services. So do you agree?
So I do concur to what Sabyasachi said. And one more thing I would like to add is, I think the ability of fintechs to now use generative AI to create micro SaaS, it is actually going to help both the institutions and regulators to help end consumers in bite-sized learning, as well as what we call snippet-sized learning, and increase the adoption of the services and improve the customer service at the end. So I think that micro SaaS or the ability of this fintechs to create micro SaaS at a faster level, I think that is going to be a game changer when it comes to improvement in customer service.
Okay, that's cool. I don't know if you want to take a shot at this yourself, Jaideep, because this is also an area that you as a provider might want to look at. Jaideep, yeah.
Okay. First of all, I have been into this business for last 25 years and primarily dealing into platform as a service, largely with banks and financial institutions and insurance institutions. My belief is that rather than building, banks have started looking at fintechs from a collaboration perspective. Large set of banks, especially some of the private sector banks have taken a lead in taking this to the next level. Just to look at a use case, UPI was launched in 2016, somewhere around April. About 8 to 10 banks started the project. Again in August, 16th of August, it was relaunched, about 25 banks, but there was not much of a proliferation in the ecosystem. Until and unless the players like PhonePe, Google Pay, and other ecosystem players took a lead and built on the customer experience side of the business. So largely it depends on the use case, wherein banks played the role of a provider, and then fintechs took a collaborative approach working with their partner banks and built the use case to solve the customer problems in the field, which has largely penetrated in the ecosystem, and that has helped us to come out at a stage where banks are instead now thinking whether they should invest in a fintech, collaborate with a fintech, or do some sort of a specific use case. So now new use cases are getting generated thanks to digital public infrastructure 2.0, which is coming up with ONDC, OCEN network, and National Health Insurance authorities. And all this ecosystem is evolving over a period of time. So I think both ecosystems will survive. Largely, it will be a collaborative approach, like Sabyasachi said, and that will flourish in days to come.
Yeah, and as KPMG, what we would like to state is the amount of interest that we are seeing in both public and private sector towards collaborating with fintechs. People are still slightly wary about taking a stake, but we have large banks like SBI also looking at figuring out what would be their role in taking a stake, but not too many others. But both public and private sector banks are figuring out how to work with fintechs and not innovate internally. Okay, so
in fact, just to add, a lot of these banks are trying to open up their infrastructure to create a sandbox environment.
Yes.
They are trying to create a use case for specific set of ecosystem players to leverage on the large customer base which these banks have been enjoying,
correct,
especially the trust which consumers have with these banks and financial institutions.
Absolutely. And even the small finance banks, we are seeing even the small finance banks actually create a sandbox, figuring out how to integrate with fintechs in an efficient manner. Good. So now I'll probably come to Sonam. So Sonam, you're the quant expert. So my question is, in terms of regulation, let's go to that other important word. So you got innovation, you got regulation. So regulation acting as an accelerator rather than a brake. Do you see any examples of that playing out in India, or do you think that's a phrase that still will take some time to mature?
Right. So, I mean, see, we are a young fintech player and we do have that up and down with the regulator, right? Like sometimes we think that they're putting a brake, and sometimes we see things coming out which have been very, very positive. And when we were listening to the talk by Mr. Ashish Chauhan, I think he was talking about a lot of things that the regulator has done to evolve India's whole system to become much more innovative, right? And there's so many examples, right? So he mentioned UPI, right, which has been a government-led initiative where, the RBI has created this scheme which makes so much easier for fintech players to collect payments. Similarly, ONDC, if you look at the regulatory sandbox that RBI has, right, which helps investors a lot. Similarly, SEBI itself is sort of trying to bring on a regulatory sandbox, so people are participating in a bunch of things, right? From fractionalization of shares to aggregation of advisory services to, so I think the way ahead for us is for the regulator to sort of evolve and understand the digital landscape, right? Like everybody has been saying that the whole system has evolved, right? I think discovery of a startup or discovery of a service happens digitally now more than any word of mouth. And I think the regulator totally needs to adapt to that and sort of cater to how the whole system is changing, right? Yeah.
Absolutely right. And from a regulator standpoint, we find folks who come for bank inspections and all to be quite savvy in terms of their understanding of how the core banking system works, the accounting system works. This was not the case 15 years ago. In fact, when we were listening to Mr. Rajiv Chandrasekhar on when he was seeking public inputs into DPDP, the new Digital India Act, he was very clear, like you said, Sonam, we are not here to put brakes, because that's what stopped Europe. Okay, Europe's Data Privacy Act equivalent is what stopped innovation happening in Europe. We are not here to put brakes. We are here to help and channelize conversation. So, so I'm guessing, yes, it's more of the same. So what about you, Rohit? What's your view on this?
Thanks. This is a very interesting topic to discuss. I mean, I see regulators or regulations on both sides. I mean, see, it's just like if we are driving a car, we accelerate to complete our journey at a given time to reach a destination, which is like a long-term thing in nature. While we apply brakes to brake or to keep it at, to be little cautious at different stages where we feel that there is a sort of a danger coming when we are driving on. So regulators definitely help us, help the entire industry in accelerating, but on the other side, brakes are also applied at a time from them to ensure that the set standards which were created within the framework are also adhered upon. So I see, I mean, I was listening to our keynote speaker, Honorable Ashish Kumarji. I mean, they were talking about NSE being getting into the tech space long back. So I see fintech as an ancient marriage, right? It's an ancient marriage between the financial services and the tech space, which happened long back. But then over a period with the regulations and governance policies, this has been completely evolving during the period. And on the other side, maybe when I was talking about an example of brakes, I'm talking about maybe at a short term for fintechs, it might look like little complex when they're changing the operations as per the regulations which come up. So that's my view towards this question, answering it. On the other side, citing some examples, I agree with Jaideep here or Sonam even. I mean, it was in 2019, 20 when RBI, IRDA, they came up with the framework towards setting up the regulatory sandbox. And see, the cohort was, at that time was started. And within a couple of years, we saw the innovation that a cohort of 6 entities in the retail payment space, which completed the successful test phase for regulatory sandbox requirement. So this itself tells, see, acceleration happened at a time when it was required, when something was come up. Similar things are happening in the current stage also when it comes to digital lending. I was listening to my fellow colleague here, Sabyasachi, he was talking about it. I'll refer to the DLG guidelines, the digital lending guidelines. Definitely long term, this will really help us to have a more robust digital lending infrastructure and help our economy to grow in that case.
And Sabya, yourself, BharatPe is zooming ahead. Do you see the regulator coming after you guys, or do you see that as advisory input helping you grow?
No, I think as Rohit was mentioning, see, typically from a pure play fintech angle, right, the knee-jerk reaction would be that, there's some kind of braking force that has been applied. And actually when the DLG guidelines came about, it disrupted the models of a lot of fintech players, especially people who are into, quite reliant or heavy in the BNPL space, right? Now, but to understand the impact of some of these regulations, I think we need to expand the horizon a little bit more. Instead of taking, let's say, a quarter or a couple of quarters view, we would need to take a view of, let's say, 18 to 24 months, right? Now, in any space, not just fintech, if you see, any new space that is opening up, the market generally runs ahead of regulations, right? So going back to, again, the stock market, this thing, essentially the stock market moved ahead and then regulations had to come about. Obviously, in a time frame of 2 years, it could have looked like there were certain, it was impacting, let's say, the volume of trades or the participation of people in the stock market. But now, with the benefit of hindsight, if you take a longer view, and now there is like 30 years that has been passed, the stock market, for example, is in a much more healthy, robust shape and it has grown year on year, right? So I think regulation is important in such a new space when new players are coming into to bring some kind of shape and form, right? I think that's one. Second is, even in regulations, when I see, right, after the DLG guidelines, then in the last 3 or 4 months, FLDG guidelines have come about, right? Now, that has in some ways formalized the engagement model of how fintechs can work with a regulated entity like a bank or an NBFC on digital lending, right? So that has given it a shape and form, right? So now, using this model, people will have to sort of restructure some of their business models, their contracts, agreements, but I believe it will only make it stronger and help, in further growth. I think the second point is, this will also help weed out some of the players who probably had a more short-term view, or let's say who are not ready to invest as much in infrastructure, not just technology, but also putting in place the right checks and balances or mechanisms, right? So that's the second point. I think the third is, if you see the kind of regulations that are coming about, I will link it to the first point. It will only lead to increased collaboration, right? I think the regulator is also taking a view that innovation and product is important, but people who are bringing about product and innovation, they may not necessarily be the best place to understand, let's say, risk, right? And some of the risk and governance factors are better managed and understood by the more traditional BFSI players, right? And therefore, instead of being A versus B, I think the regulator is also taking the view that we need increased collaboration. And some of these regulations will nudge or push players towards increasing collaboration, like whether it's FLDG or whether it's other kind of guidelines.
Absolutely, and we were privileged to be part of a short Niti Aayog meeting probably 6 months ago, and precisely what you said, Sabya, it's all about collaboration. What they are here is, they're saying, gone are the days when we are circuit breakers, we are here to help you channelize. And I think that's a mantra. I think that mantra, if it continues, that will be something that will actually be one of the things that will propel India forward, right? So coming back to you, Jaideep, the question is, we've heard largely in the last 2 questions that regulation is important, but what we are as a group seeing is that regulation is something which is acting as a catalyst for growth. Now, coming to the old reason as to why fintechs existed or were born in the first place, it is to help improve time to market for products, right? So with your phenomenal years of 25 years plus in financial services, can you cite some recent examples of where you've seen such improvements happening as a result of fintechs entering a particular case scenario and the overall ecosystem improving?
While we are aware of UPI as a channel, but prior to that, when Aadhaar was launched and bank account Pradhan Mantri Jan Dhan Yojana scheme was rolled out, it was the fintech ecosystem which took the lead along with banks. So banks had their own bandwidth issue in opening the account. So fintech ecosystem, banking correspondents or companies took a lead, and that's how the entire ecosystem was able to do about 50 crore accounts in a span of 1.5 years. So that is a phenomenal achievement. That's one example which I can easily cite. The other ecosystem, apart from payments, is insurance ecosystem, wherein the regulator came out with a guideline of digital point of sale person to increase the insurance penetration. Till 2019, our insurance penetration in the country at a national level was roughly around 1.5%, considering both life as well as general insurance. With POSP guideline, we have reached up to 7% now. And this has largely happened thanks to the regulator's initiative of collaborating and allowing partners like Policy Bazaar, Insurance Deco, and other players to go out in field, onboard customers digitally, and allow them to sell insurance policies digitally. So this has been the 2 large examples which I can correlate. The recent one, just to comment on the earlier point of regulator being supportive or not, on 6th of October, just recently, regulator has come out with a framework. They have asked participants of the ecosystem to come out with a self-regulatory organization guideline. which is very a positive signal from an ecosystem perspective. And this signifies the importance which regulators are now giving to this entire ecosystem. They want ecosystem players to come out and set up a framework for operating in this entire ecosystem, which will help the ecosystem to flourish and be the next big thing in the country, because by 2020, this ecosystem of fintech is going to be about $200 billion. That's the BCG and KPMG have already reported it earlier. So this is going to be the large industry apart from BFSI ecosystem, which is there.
Yeah. And since from most of our prestigious institutions, most of the guys are going there, I'm guessing since the best brains are there, I'm guessing capital will chase brains, right? So yeah, those numbers sort of stack up. Sonam, your thoughts on this?
Right. So I would talk about few of the services that I see changing the way we operate, right? So see, we are in the wealth tech space, and we can see now aggregators have come in, right, for smaller advisors who make their life so much easy, their time to reach the customer so much easy, the whole compliance-based onboarding to payments, everything is so much enabled by our digital technologies. And talking about other frameworks as well, right? So we use a lot of payment services where we've seen so much evolution, right? So things like auto pay have come in, steadily and made our life so much easier. When we look at the traditional ways where we work, right? Let's say the onboarding piece, right? For a PMS or an advisor, it is a big headache which has there been traditionally in terms of paperwork, and you have services like CAMS, and I think some of the players who are sitting here who have made our life so much easy with digital signing, onboarding, etc. And on the wealth tech space, see, the stuff that we do sort of helps clients a lot, right? They want to take advantage of the opportunity that India has, right? India is not only seeing the evolution of fintech, but the whole economy as a whole is growing, and there's so many good investment opportunities for individuals in the country. And they're looking at advisors like us who can extract those opportunities, not just in which are not covered by the larger financial instruments, but which a financial advisor can help you access better. And that is where we are coming in, and we are enabling all that for those guys. So I think so much is evolving and so much is happening. Insurance we've talked about. So we never talked about traditional insurance provider. We have these catered insurance specifically for smaller startups that are making our lives easier. So I think so much innovation is happening, which continues to evolve and makes our life easier. And we just hope that the regulator stays on our side and enables the whole ecosystem, right?
Yeah. So earlier, I think the problem was with demand. Now that there's so much of demand, I think it would be slightly challenging for anyone to get in the way of the flood that is coming, right? So they have to act as channels rather than speed breakers, like I said earlier. So Rohit and Sanket, maybe a quick couple of points each before we move on to the next one.
Yeah, am I audible?
Yeah, you're
So see, definitely this is really fostering innovations. Currently, the fintech state, and especially post-COVID, has been speeding up really well. You see, somebody quoted about ONDC, is the latest innovation, which is around, it's a collaboration between the supply chain, fintech, networks, one side buyers, other side sellers, in between payment aggregators, logistics players. This is called a comprehensive or a holistic collaboration, which is fostering the innovation. Then there are so many, in a recent fintech event in Mumbai, almost 25 odd new product lines from NPCI were launched. And today, credit cards on UPI is another innovation which NPCI came up with. Then there's so much work is happening towards financial inclusion. At a time when AEPS came in picture, today BharatPe is penetrating largely in rural sector. So every space today, this is a right group. A group mix of PhiCommerce, which is into payments fintech. We are a omni-channel payments player. Digital lending, from a regulatory perspective and the process management perspective, from research, from financial inclusion. Everywhere, all this is, well, we can't talk about one, but all segments in the fintech space are typically innovating some or the other way, reaching out to customers, ensuring mis-selling is not happening, having an appropriate process management around it under the regulatory aspects.
Okay, and Sanket, maybe a minute.
So I think, in the keynote speaker, Mr. Chauhan, he said, for future, we need both soft and hard infrastructure, right? And let's, a buzzword which we have right now, $5 trillion economy. So he said two things, right? 2% increase in GDP through telecom and 2% increase in GDP through BFSI. This can be done. So there is a interesting technology which is getting implemented as we speak in the back end, but it is not in the BFSI side. So this technology is going to help financial institutions, whether it is banks or insurances, in cashless branches. It is going to help players like Signzy, BharatPe, or PhiCommerce in completely paperless onboarding, and then it is going to help underwriting teams to do a faster underwriting by bringing people to branches and providing a better internet service. And the third part will be the collection side, the digital collections which will happen more efficiently, or digital renewals which will happen for insurance company. And I think the technology here is the LEO satellites, low Earth orbit satellites, or the satellite internet constellations. I think NSE has done this for previously for the stock market, and this is going to change for banking and insurance industry, because they'll be able to open up branches at a remotest place without a need of a physical internet infrastructure, using satellite internet at a very low cost. So I think that is going to change how we collaborate and how we contribute to the economy in a larger way.
That's awesome. That's awesome. I mean, good input from the entire group. Now, the penultimate question, because we probably have another 10 minutes on this panel. In terms of, let's go back to the grayer side of things, right? Regulation exists for a purpose, right? It has never happened that, or rather it might have happened in the license Raj, when you have regulation and then you find work, or rather you try to look for opportunity to match the regulation. But now regulation exists for a purpose. What do you think is the purpose? If you look at, say, some top 3 risks, and maybe you can start off, Sanket, again. If you look at any one risk that regulation is trying to cover off, what do you think that could be?
I would, as you said, you saw Chinese on my LinkedIn profile, right? So I worked in China for 4 years, and I saw that revolution in fintech industry and in BFSI in China. And as a contributor and as a user in China, and as a contributor and as a user in India, both and at the same pace, even then. So what I see regulators are going to try to avoid is loss of livelihood because of frauds is going to be the biggest thing when they are going to take decisions. So if you are a fintech, if you are a financial institution which is doing innovation, and if any of those technologies are going to be used by fraudsters to make a loss of livelihood for larger section of population, you should be having something at back of your mind that you need to be a compliance first organization. So you need to implement slowly, probably when you're beginning to implement the technology, you need to have that compliance first mindset somewhere in the hindsight when you're growing very fast. So I think that is one area we would.
Yep, never thought of that before, because we are all thinking about let's get it done rather than what could probably be an implication. So Rohit, what about you?
I look the risks from few prospects. Yeah, definitely you talk about the top 3. Cyber security is among that. See, today when we are into payments, definitely we always say we always talk businesses should avail a secure payment gateways, which are well encrypted, strongly encrypted, having technologies like SSL encryption on the other side. Then not only that, are equipped with the guidelines also which were rolled out related to customer protection, which is data storage on the other side. Because cyber attacks are prone to the data leakage completely. And if you remember a couple of years back when the regulator said the card's data has to be not to be stored, right? And tokenization as a solution came in picture. And today you see everybody which is into payment processing or towards the issuer or the acquiring side are availing tokenization or implementing tokenization as a solution. So these all things are actually a result of the past learnings which we had from the ecosystem and immediately acting and coming out with innovative solutions around that and creating a framework policy on top of it.
Awesome. So livelihood, cyber, Jaideep, what's your view?
I think the most important part from a regulatory perspective will be anti-money laundering and KYC related aspects, because that's the key focus area for any institution, be it fintech or be it any bank or insurance company. So AML guidelines have to be followed, and like Sanket mentioned, that it has to be compliance first approach. KYC and AML guidelines have to be part of any innovation which is getting built nowadays by fintech ecosystem. And most of the fintechs, when we started, fintechs have started their approach, they are focusing largely on innovation rather than focusing on compliance. So that's the next thing which fintechs have to imbibe in their innovation journey. AML guidelines, KYC related aspects which has to be taken care of. And apart from data sovereignty, data has to be residing in India. So data has to be stored in India. Most of the regulators are looking to ensure that data has to be secure, because that's the next big thing. Data is the new, sovereignty is the next thing.
I would like to add here, that was the reason when Data Storage Protection Act came in picture, and most of the foreign players had to halt their businesses or to restructure it.
But again, regulation has been reasonably kind. If we were talking 15 years ago, everyone would have been given a month to comply. Today, you have to give a plan in say 45 days, and you have a year to comply. So I think everyone's mature about the fact that there is an issue, but everyone has enough time to comply. So that's a huge leap forward. So one final bonus question to anyone who chooses to answer, and that's, so we have three broad regulators here, right? SEBI, RBI, and IRDA. So if there is one question that any of you would like to ask the regulator, and given your understanding of what the regulator is thinking today and probably thinking for the future, what could the potential answer be?
So I would sort of want to ask our regulator, which is SEBI, on what they're doing to understand the evolving digital landscape, right? So there's been discussion on the payment system for advisors changing and everything like that, but it is still a lot of thought process that is there with the regulator is still very much tied to the old world. I want to understand, what they're doing to understand the younger generation, right? Who wants to do a quick payment, through a payment gateway and gets a quicker response. And who discover products through Google, right, instead of getting something in the newspaper or somebody calling them about it. So the whole system itself is changing, and the regulations have to adapt to that. I want to understand what they are doing to do that.
Vishnu, it's actually a difficult question, and you have put us on spot. But this is my personal view. I think our regulators are still working in silos, so they are not working in synergy. So there has to be an apex body, maybe including all the regulators, to work together and bring in some sort of harmony in the ecosystem, because insurance needs payment, everyone needs other services, KYC needs other services, SEBI and other regulators are coming out with their own guidelines, IRDA is coming out with their own guidelines. Broadly, all the aspects of guidelines are related to either KYC or how to store the data, but there is no single unified guideline issued by all three regulators. So maybe my request to all three regulators is to come out with a single framework which fintech ecosystem can adapt and follow. And maybe SRO is the best approach for that, wherein all the regulators can approve SROs to work on these frameworks, suggest us possible framework, and come out with common guidelines for fintech ecosystem.
See, I mean, I have a lot of respect for regulators, the sort of work they have done and helped in fostering the collaborations between traditional businesses, traditional financial services models, and newish tech fintechs in picture. And gives a lot of happiness even. I don't know how much of you know or not, citing about RBI started with Innovation Hub a few years back, was a good step towards when Jaideep was asking, coming up for asking for collaboration, seeking innovations in a more collaborative way. Then the latest is the fintech department set by them. Is also really gives us a lot of confidence when we are a part of fintech industry. And here I request the regulators also, if when these departments are really set up for some good purpose, which should also, we should have regular interactions, understanding the clear-cut roadmaps, because the businesses are dynamically evolving in every sector, right? And roadmap, as I said, short-term and long-term roadmap, which the regulators are helping us to achieve, should be more regular in nature, as Jaideep was asking. It should not be in silos, it should rather be in more of a, in a collaboration way altogether.
Sabya?
So I think my key question, and this will be for RBI, is how are, what is their sort of vision in terms of expanding this whole space or sector, right? To elaborate, see, if we see in the last few years, there are hardly any banking licenses that have been given out, right? Very few. Similarly, on the fintech side, a lot of the fintechs now want to get a license so that in some ways they have a license to operate. But very few are getting licenses, even within the NBFC space. And now, obviously, there is a PAPG license you would need to get to operate in payment aggregation, right? Now, if, at one end, we are trying to regulate the space, and which is also pushing towards more collaboration. But on the other hand, if you have to grow the space, you would need to get more licensed entities. And one way to obviously ensure that the regulation is doing its job, you have a certain penetration of regulation, is to get more entities under your fold, right? And for which you would need to have more licensed entities operating in the market, right? So I think there, I'm not sure what the game plan is, right? Are we going to rely on few large banks or few large NBFCs, right, so-called systematically important, and they will drive a lot of the growth along with the collaboration with fintechs? Or are we looking at sort of, larger, as in more number of smaller entities who can sort of function on their own, right? So there, I think I see this at a little bit odds with overall growth that we are planning or that we are seeing within this banking and lending space.
So very, very, very good input. And Sanket, last but not the least, over to you.
I think, one thing I would like to say, I think very differently from what others have said, are four regulators, I would say, not just RBI, IRDAI, SEBI, but also TRAI. Are they going to back, Indian app stores? So this is something new which is coming up, right? So what I see is, from my experience in China, if we want our fintechs, our startups, our ecosystem to actually become more mature and have a level playing field outside India, we need to have our own app stores. So are they going to push and back the app stores which are probably been pitched by PhonePe or others in India? I think if they are able to kind of support this initiative, we'll have a far better level playing field for our startups.
Perfect. And just recently there was a lot of push around a couple of players coming up with their own app stores, but primarily driven by pricing mechanisms of the existing larger players, right? So the more they try to, nail us down, I think that is where innovation starts, right? So cool. So this has been, I think, for me personally, it's been extremely educative, this entire session. I'd like to thank all of you. I think the key takeaways are, yes, fintechs are the harbinger of all good news, but some of the key inputs are, for example, like Sanket said, livelihood. Okay, so as long as you're not bringing innovation at the cost of existing wellness, or we sometimes forget that, the innovation is happening for a particular purpose, and that should not be contradictory to what the nation is trying to achieve for a particular segment. Everyone has to move forward and not just a particular segment. So given that, I think we've been able to achieve, I think, a reasonable amount of consensus that regulation is important but should not get in the way of progress. And in India, at least, that's not the case so far. But again, going back to Sabya's point, there could be some contradictions based on what we are seeing. Are the number of licenses coming out proportional to the size of the ambition that we have, right? So with that, I'd like to thank everyone on this August panel for your valuable time on a Thursday morning. I think we've managed to, again, close this panel on time. I think my last 3 panels have all closed on time. So hearty congrats to me as well. Okay, thank you so much.